On the Investors Corner podcast this week, we're going to have a look into why rental prices are increasing so much and will this trend continue into 2024. We will also have a look at why a large portion of buyers out there are first-time buyers and cash buyers. We'll also have a look at the build-to-rent sector and are these premium apartments that the build-to-rent developers are building pushing out your normal landlords. And Georgina will also give us an insight into what's happening in the Reading area with supply and demand. So make sure you tune in for this one and make sure you hit the subscribe button so you never miss an episode of the Investors Corner podcast.
First of all, Georgina, you've got many years working with landlords, working in property. How is life? How is your business?
Yeah, it's good. Yeah, it's great. After teaming up with Sarah, we're growing it, it's great to have somebody else on board for support and to continue with what we're the ultimate goal. So yeah, it's great.
Yeah, it's good to see the business double in size and double in experience as well, because both you and Sarah have obviously spent a long time working with landlords and property investors and the like. So this morning, before jumping on this podcast, I just had a look at one of the kind of property investing websites, and the data suggested that we're nearly up to 75% of landlords have or will be by the end of the year increasing their rent. So it is a little bit out of control with rental prices at the moment. I know we spoke about it more, but I think on this particular podcast, it would be good to kind of really digest why is it happening? What are all of the different reasons that rents are going up at a higher rate than what they would do, because they are above inflation now. And normally they kind of sit fairly steady, don't they, like house prices? But it is a little bit out of control with the rentals at the moment. So why do we think that's happening? Andy, let's go around the room. I'll go to you first.
Well, I think it's to do with obviously the lettings environment. So you've got more sort of applicants renewing their tenancies, not being in a position to buy a property, which is having an effect on the supply. You've got stuff happening with mortgage rates, obviously still quite high, although we've seen them sort of decreasing over a period of time. They're still high. People can't afford to buy a property now. Obviously, with mortgage rates at the rates that they are, rental prices increasing the way that they are, we'll probably end up seeing sort of a mortgage monthly payment compared to a rental payment, and rental payments actually becoming more expensive than trying to get a mortgage. So yeah, like I said, more tenancies renewing, more people looking for rental property because they can't afford to buy. That's what's having an effect on it, really.
We had a landlord in the office yesterday talking about their buy-to-let and what they were going to do with it, because their mortgage, they've been paying an interest-only mortgage, and it's been just over 200 quid a month. Rent is 12.50 or something like that. Yeah. But that's about to go up to 900. So it's about to go from 200 to 900. And they're now looking at it with their accountant and saying, does it work? Does it actually make sense? But the conversation was, well, how much of the rent can be passed on to the tenant? How much can it be increased to make it work? And I think the difficult thing for the tenant at the moment is they've got no choice but to just accept that.
Yeah, I think this is the issue actually with landlords who aren't increasing the rent year on year. Maybe they don't want to be the bad guy and do that, but actually it's the knock-on effect not doing that is that suddenly now they're almost having to catch up and hike the rent up to be able to afford their mortgage payments.
Yeah, it's difficult. I think your first point in answer was FOMO, you know, the fear of missing out. We saw that with the sales market, didn't we? With stamp duty holiday, shortage of properties, buyers were panicking, overpaying on properties. They knew they were overpaying. They were happy to overpay because the fear of missing out was there. And it seems to be with tenants now, that's the challenge they've got at the moment. Is I went and sat with my tenant about 2 or 3 weeks ago, and they've got a little one in a one bed, and they do need to move out of my property. They know that, I know that, but they can't find anywhere. Yeah. So I'm obviously not going to kick them out. I know I could get at least £100, maybe £125 a month more than they're paying, but from a moral point of view, that's not the goal. The goal is to try and help them find. So I put them in touch with a mortgage advisor. We're looking at other properties, but in reality, they are a little bit stuck. And I think that's the big issue for tenants at the moment. Why is it happening, Mike? Let's go down to the nitty gritty of it. If we look back over the last kind of 4 or 5 years, why is this happening now?
So Section 24 tax relief kicked in and sort of started biting really, I think 2 years ago. So landlords get taxed on the full rental income and can only get tax relief on mortgage interest at basic level rates. So that didn't really affect people when they were paying 1.5%, 2% interest. But if you're paying 5 and 6% interest on your mortgage, suddenly your mortgage payment matches your rental income, but you're paying tax on the middle 20%, because most landlords are 40% taxpayers, let's be honest. So they're paying tax on a loss. The landlord you mentioned, I've got a small gripe with that landlord that he's known his mortgage rate was going to go up for the last year and a half, and he's been making £1,000 a month profit for the last year and a half, and he should have kind of planned and maybe held some of the money back, and then you can just kind of cost price average it out for the next 2 years until we see a more average mortgage rate. Or probably, I know in 2 years' time, I'm going to throw my hat on the table and say I'll probably remortgage it 3.5%, 4%, and everything will be normal. But the reason it's coming out in the wash now is Section 24 tax relief was kind of all designed around the mortgage rates that were the normal for 14 years. Now mortgage rates have gone from an average of 2% to 6%, or whatever the averages are. That's really biting landlords hard. So they're paying tax on a loss and having to hike the rents just to break even.
And I think you touched on mortgage rates, and you're talking to buyers, you're talking to tenants, to landlords, to sellers. But I think mortgage rates at the level they are at the moment, we want to, and logic says, and even educated guess says, in 24 months' time, if you're doing a fixed term today on your mortgage for 2 years, in 24 months' time, the rates are going to be lower than they are today. That's what we're likely to see. If you're paying 5.5% interest rate today, there's a very good chance you're going to be paying 3.75, 3.8 in 2 years' time, something along those lines. 4 even, 1.5% is different. So it's not like you're going to pay, in this case scenario, £900, an increase from £200 to £900 forever. It's just for this window, and you've just had your cake.
Exactly.
Yeah.
That's the
And you
point
ate
I'm making. Exactly. Yeah.
and you gobbled it all up.
You should have put a couple of slices in the fridge to average things out. If
And now
we're continuing with the analogy.
Yeah, 2 years of crackers. There's a lot of crackers chat on this podcast. So talk to me about the Reading market. We won't talk about Reading football at the moment because we don't know what's going on there.
No.
But let's talk about the Reading property market. You've worked, lived, breathed it for many, many years, over a decade. How is it at the moment in general for property investors?
So it's obviously always a buoyant market. We're seeing more and more talks about new developments that are going to be built. So it is very oversaturated with a lot of flats, but the demand is there. There's always going to be the people that perhaps come out of London. If you've got something in the town centre, it's so easy to commute. People don't necessarily need to worry about parking. The only thing it doesn't help is the local residents who are still fighting and scrambling to find somewhere to live. So as a landlord, it's always a popular choice for investors because there's always the demand. The yields we're seeing are ever increasing as well, obviously, with everything that's going on with such a shortage of the supply as well.
So you say about saturation, is that for sales or for rentals?
Probably more for sales, actually. You'd see people buying something, perhaps a new build flat, and then actually not making their money back on buying them. So if you're looking at a long-term investment, then yes, absolutely, a flat's a good option. But if it's only a shorter term, then it's not so much where I would put my money personally.
Yeah, I mean, there's markets opening up in Reading. Me and Ian and I experienced that this month. We went to visit the Thames Quarter, which is 350 build to rent flats, an enormous tower in the middle of the town, and the rents that they're achieving in there are insane.
Yeah.
They've got a 99% occupancy rate, something crazy like that. Average 2-bedroom flat is knocking on for £2,000 a month.
Yeah,
The
it's-
clientele is amazing. The building's amazing.
Yeah.
Um,
The communal areas are a big sell for that, I
yeah,
think.
my understanding is there's around about 1,200 more of those flats in the pipeline in Reading, at the Oracle, at the Station Hill, at the Broad Street Mall. Is it still called the Broad Street Mall?
I always call it the Butts, but I'm old school.
That's 90s. Don't know
Show
what we're
me.
branding yet, but there's thousands of these
Yeah.
build to rent flats now. How do you think that's going to affect the regular Joe landlord out there?
Yeah, I think there's, for the average ones, is it going to be an option for them? I think we're looking at more the serial investors that will go for these type of ones, rather than the person who's perhaps an accidental landlord or just wants to buy one buy-to-let property. But there'll be so much option and scope to do that yeah, hopefully we could those ones will be reached.
Is it going to cause that saturation of properties where it's difficult to rent a flat in Reading, or is there just a never-ending supply of tenants?
You said yourself, what was it, 99%
Something like that,
occupancy rate?
yeah.
And yeah, as I say, people, if you look at the prices of, say, renting in London, if somebody, with Crossrail and everything, it's not actually that hard to get back into London. So we will see more people moving out, I think. Yeah, that's where the demand is there. Otherwise, they wouldn't be being built, or even in the pipeline to be built, rather. So yeah, I think it's almost a shame, because it's losing the heart of the town, and it just being flat. So for the locals, it's yeah, I know I shouldn't say it because estate agency head, but they need to offer something back in terms of services rather than just building all the flats and not putting anything back in.
I think employment levels at the moment in the UK are pretty desperate, for labour, aren't they? So I think if it is bringing the ability to support the hospital or whatever it may be, then it potentially on a long-term basis is a good thing. I think where with the saturation question, where people were worried when inevitably this was going to happen and we were going to see banks and investors and funds, etc., start to launch these massive units of 250, 350 apartments, what people were worried about is they were going to undercut the standard property investor and landlord. They were going to come in with 300 properties and go, well, we just want 100% occupancy, let them all for 1,000 where market rate's 1,250. Actually, they've gone in and they've done the opposite.
Gonna build a premium
They've done the
market.
new home versus residential
Yeah.
home analogy in residential sales, and they've gone, well, we're a new home, so we will fetch a premium. And as much as the residents don't like a new home site of a good quality developer coming in because they're worried about the increase of traffic, etc., what a good new home site does is it pushes the premium prices and the average prices up for everything within a half-mile radius, because there's a new benchmark.
Yeah.
And that's what these rentals are doing as well. So although there may be more competition, I don't think the competition's the same. In the same way that maybe the competition that buys a new home is not the same competition that's going to buy the 4-bed detached on the 1980s estate. It's just, they're not the same demographic of buyer, and I don't think they're the same demographic of tenant. Definitely not the ones that we saw anyway.
No.
They're not looking on Rightmove, are they?
No, they're being transported and placed in this with a concierge style service rather than ringing round and making inquiries at 9 o'clock at night. It's more of a booking.com system. I'll book that flat for 18 months and then I'm there and I'm gone. Yeah.
2 stat bombs. There's the grenade. From Zoopla this month, actually. Stat bomb 1, 2 in 3 buyers at the moment are either a first-time buyer or a cash buyer. The upsizers have become the minority. And we know that because we expected it to happen because of the stamp duty holiday. The other stat bomb that's more relevant to this conversation is the last 5-year average of either cash buyers or investment buyers was 20% of the market. It's now 33% of the purchasers in this particular kind of 12-month rolling window. So 33%, a full third of buyers are either cash or property investors that are buying on transactions at the moment. And I don't think a lot of people expected to see that at the start of the year because of the whole fear factor of what we were seeing. But it would appear that cash buyers and property investors are not double, but a solid plus 60% up on where they were on a 5-year average. Why do you think that's happening, Andy? Interest rates are high, doom and gloom in the media. Why are they coming out to buy in this market?
Well, I think with what's happening with house prices at the moment and the media, that you see that house prices are sort of coming down. I think there's bargains out there to be had, isn't there, for property investors, cash buyers. You know, if they see a property that's been on the market for 3, 4, 5 months and nothing's happened on it, and they come in as a cash buyer and put in a cheeky offer, and it gets accepted because they're desperate that they need to move, then they're getting some bargains. So financially, it works out. It works out for them. Same with property investors as well. As property investors that are probably buying at the moment are you seasoned property investors, probably not ones that are starting out. You might have ones that are starting out on, 1-bed flats, 2-bed flats, then renting it out. Because I've seen some properties out there that you look at it and you think, bloody hell, that's amazing price. And they're, like I said, they're desperate to move. I'm seeing a lot of people going through split ups at the moment, and being in a position where they need to get out
story of the last 3
get
years,
out as
isn't it?
quickly as possible. They don't want to be associated with each other. I've had a couple of them last week actually, but they seem to be coming out of the woodwork. So yeah, it's just people's onward move that. Their position that they need to move, they want to move. They're not holding out for the highest price, which is allowing investors and cash buyers to come in and get the property that they need for a decent price and a great investment.
Yeah. I think opportunity. We've spoken about it and said, and we were ridiculed on some of social media channels by kind of the people that thought the housing market was going to crash 30% this year. We've got 2 months to go. I think it's a full moon tomorrow, so I'm sure they'll be barking at it. But I think in realistic terms, opportunity is there for those cash buyers. And I always say to any of my friends and family or clients for that matter, if they are on the buying side of the market at the moment, November and December is your best opportunity to strike a deal, to strike an opportunity. The people that are selling, that are still on the market, are the most motivated, and the buyers that are out there are of a lower volume, so you have less competition. There's better opportunity to strike a deal, and I think that's probably why it is. I think they've taken advantage, and that's why good people kind of buy their investments on the down curve, whether it's stocks, shares, property, whatever it may be. If you're buying on the down curve, it's going to go up. And if we use that analogy that we spoke about before of the £200 increase to the 900, the £700 difference, if you can go and get the property at £35,000 less than what you would have paid 12 months ago, that's just over 4 years of mortgage payments before you break even. And it's not like you're buying it for a residential where you're spending another £700 a month out of your own income. You're just not making £700 a month profit. You're making less profit, but you're still in the win. Otherwise you wouldn't get the mortgage. It wouldn't be allowed. So I think it's important to talk about that, because sometimes the data can be spoken about incorrectly. And it's, when you look at percentages and changes, it's important to look at the whole landscape, I think, as well. Will it carry on? Are we going to see 75% of landlords for the next 3 years, every single year, looking to push rents up at this level? Are we going to be in a position in 5 years' time where the £2,000 a month that we look at and go, wow, on a 2-bedroom in central Reading is just the norm for all of them, and they're 2.5, 2.7, 2.8? Will that be the case in 5 years' time? And I think it's important to put our opinion out there, because that impacts the buying decisions for investors, the buying decisions for tenants becoming first-time buyers, and also for us as agents that are obviously operating. But is that the expectation or not?
I think inflation will slow as for rental house prices. I can't speak for inflation as a general. That seems to bounce around all over the place depending on whether you're a petrol buyer or not. I was at a seminar on Friday with some very, very sort of high level compliance and lawyery type people. To take everything with a pinch
really
of
fun.
salt. But their stat that they came back with was in London, rentals are roughly 40% of people's income. Now 40% of your income goes on rent. Now we know on an affordability check we run around about 30%.
Yeah.
So the average, that's not just the top, that's the average of what someone's spending, is about 30% over what they should be spending from their disposable money on rent. And that's not taking into account that everything else in their life has got more expensive anyway. Outside of London, the number is around about 33%. So it's a question of sustainability. A landlord would rather have a good rent that is paid than a high rent that a tenant defaults on. So I think market forces from the affordability side of things has to say that this inflation will continue going up, but it's got to slow at some point. Do you see what I did there right at the end?
Yeah.
Just gave myself a little bit of space.
I'm going to I like stats, I like stats. But on that particular one there, in London, people earn more money. So the 40 to the 30 to the 33% difference, I don't think it's the number to look at. The percentage is not the number to look at, because if the average salary in London is 55 grand a year and outside of it it's 30 grand a year, it's the pounds and pence swing. Still, the London person has more free cash than the home counties person. So it's still relevant. So it's almost, for me, it's interesting to see that in London the percentage is higher, but the actual leftover cash is also
Is a higher amount of cash.
Yeah. So it's still okay. It's how you kind of look at the data and go, that's a problem. I'd look at it and go, no, it isn't.
I think it depends on your position in the market as well. There's a group of people who are on fixed salaries, who really will struggle with it. In the health service, teachers, etc., where they can't
families
affect
with kids.
can't affect the amount of income that they have, which is at probably the 1 and 2 bedroom flat market, where they can't move upwards, will struggle with it. Those who are IT professionals or in banking or whatever, blah blah blah, who are spending the £2,500, £3,000, £4,000 on rent, are probably within that bracket that you say. So I'm spending 40% of my income on rent, but my income's 20 grand a month anyway. So shrug.
Yeah, I'm all right.
Yeah,
I'm okay.
Yeah,
I'm still buying the most expensive Starbucks 3 times a day.
Yeah.
And that is something that I think will be interesting to see. What does the prices do? And I think the tenant quality as well. When we were doing rentals 8 years ago, we were really, really looking at the type of tenant. We were thinking, right, what job, what profession are they in? Where are they at with kids? Where are they at with pets? Who's earning? Is it a couple moving in with 1 income or 2 incomes? We were really trying to make sure the landlord was secure in the right way, because unemployment levels were a little bit higher than they were before. So that had an impact, because what we were trying to do is secure a void period and make sure that didn't happen. Whereas now it's actually, it's a bidding war, isn't it, for tenants? So the choice is quite simple. You just look at them, and obviously the landlord makes a decision based on that.
Yeah, and it's harder to pick a tenant, because where before, years ago, you used to have, one applicant coming in that earned over 100k, and then you might have had 3 applicants that earn 30k. The landlord always used to look at the salary and go, right, I'm going to pick that one. But now you could have 5 offers come through where the applicants are all earning above 100k. So the landlord's like, well,
Can't
I don't
make
know.
the choice between them.
I'll pick the middle one.
Well, let's play trump cards with tenants then. This is property investors, landlords listening. There will be tenants listening as well, and this will help them too. This is not necessarily our opinion, but it's just the market. If you were to rank tenants, in 1 to 10 based on profession, etc., what is the ultimate tenant moving into a 3-bedroom end of terrace property? What is the perfect tenant when you're looking at, they're all paying the same price? So we're thinking void period, longevity, security. We're looking after the property, etc. What's the perfect tenant Who are you moving in there, Georgina? This is your property.
For me, it's families, because if you've got families with kids of a certain age that are particularly primary school age, they want to stay. They're not going to want to move around and move their kids around and potentially move their kids' school because they can't find another rental property within that area. So for me, it's families. Whether they've got pets. I mean, I've always been a big fan of tenants having pets. I feel like they look after the property better. I know that obviously you can't discriminate against that anymore. But it's I think kids destroy a house more than pets anyway, to be honest. But I think they're for the long term, for somebody treating it like their home as well. I think that's that they're the better ones, rather than, I mean, sharers have always been landlords have often wanted to stay away from them. You never know what you're going to get, but statistically they're not as likely to stay as long or look after it as well if it's a young professional sharers. A couple who don't yet have children have no tie to a certain area, so again, they might flit off after a year or two's rental. So for me, it's the long-term family renters that are the best bet in terms of a return on the investment.
What about you, Mike?
Not far off that. I still think families are the best for the same reasons, that if they're in, they're in, and they'll stick. Just putting a financial thing on that, I think Andy mentioned earlier, is how much headroom they've got on the rent, because families obviously have higher outgoings than single people or couples with no
They were saving to
kids.
buy, maybe.
Yeah, well, that's
So
it.
it swings and
Couples
roundabouts.
with no kids have got massive headroom, but like you say, they're likely to be more transient in nature. What I'm looking for is ideally a family that have got decent headroom for the next 2-3 years, not moving in right on the line of affordability now.
So thank you for listening to this episode. There's some absolute golden information in there. So I hope you enjoyed listening. And if you want to listen to more of these episodes, then make sure you hit the subscribe button. The more subscribers we get, the more guests that we can get on, and the more information that we can give you.
Why have we made the Investors Corner podcast, Ian?
I think online at the moment there is just way too much noise, waffle and nonsense. Everyone's got an agenda. So the goal was to make a podcast for people that want to invest money in property or other areas where there's no waffle, there's no nonsense, there's no agenda. It's opinion-led, but it's an honest opinion. And it might not be the right answer, but we're going to share it.
So on the podcast, we're going to supply people with access to mortgage brokers, financial advisors, planning experts, development consultants, everything around the property industry and the wider fields.
Yeah, so if you're looking at investing in the future, you know that just having an income from your employer or from your business is not enough to give you the life that you want down the line. We're going to hopefully give you some of those answers that will give you the solutions you need for the future.
So please hit the subscribe button. The more subscribers we get, the better guests that we can get on, and the more people that we can reach. So hit subscribe.